Welcome to the Relentless Growth podcast. I'm here with my good friend Chase Calhoun, and we've got an exciting topic to talk about today. But before we get into that, we're going to kind of start out like we do with every episode. We're going to start out with kind of wins and updates in our lives. And so, Chase, start us off. What's been going on with you lately, and what's a win?
Man, I think I'm gonna do a personal win today. I've been did a that half Ironman a couple weeks ago, and I'm just starting to ramp back up into the training for this full Ironman. And I had been still sore for a while. My knees were hurting and stuff after that half Ironman, and so this has been the first week where I feel like I'm fully recovered and able to do all the training that I'm supposed to be doing. So I think that's a big win for me. And then business wise, as far as what's going on, we're breaking ground on some more just infill build to rent. So specifically, I think this last week we started on it's like 5 or 6 duplexes and a couple of small single family houses, and so it's kind of fun because we're out there, clearing lots and pushing down trees and stuff like that. And so just a lot going on. So excited to get started on some new projects. How about you?
No, that's awesome. Yeah, I'll switch to a personal one as well, and a little bit of a tech one. I'm trying out a new app for running, and so there's an app called Runna, and so it's laid out like a whole plan for me to get to where I want to go to run a ultra marathon. And so uh, I haven't found a good one before, and so it integrates with my watch and everything. And so that's my little personal win is I've got a plan together to get me where I want to go. So I'm excited about that. And then from a business standpoint, honestly, the biggest update lately is we've actually had some dry weather, and so we're able to break ground, move dirt, get a lot of things done, and so we've been making a ton of outside work progress that we've been really held up on for the last couple of months, and so we've got a multifamily building, the first on a complex that we've got to occupy beginning of next month. And so we're doing all the landscaping on it now and kind of getting that together. And so getting to see it's the first building on a new project. And so getting to see all that come together at the end and really know what our finished project is going to be is really exciting. So that's been a great thing that's happened just here lately.
Yeah, that's awesome.
Well, to kind of segue into our topic, we're talking downturns. We're talking what do you do? 2008, COVID. Some people would say that we're in a downturn currently. Kind of what's our individual perspectives on that? What's the business perspective on it? And kind of how do we treat those learning lessons? Do we keep moving? Do we pause? Kind of what's our individual take on that? So just to kind of start out, I'd go back in history for you. Like, when did you start building and investing? And so, what downturns have you seen, and kind of what's been your historical experience just with them on a bit of a surface level?
Yeah, so as far as being actively investing, I haven't been in the game as long as a lot of people. I've been doing this full time for about 8 years now. I will say I had gotten interested in real estate investing back in that 08, 09 downturn. And so I was, I guess, at least paying attention to it, even though I was sitting on the sidelines watching. I regret not that's when I wanted to get started in real estate investing in high science 2020, but I didn't, and I wish I would have, because that would have been a good time to be buying on the as that started to go back up. And then for me, since I've been investing, I feel like I've seen some lull periods. I think COVID. I was an active early investor when COVID hit, and I remember that being kind of scary, just because there was a bunch of uncertainty. Even though it ended up working, I was worried it was going to like very negatively impact my real estate investing. It was actually kind of did the opposite, because there's more of a demand for rental properties, and so even though we dealt with the price fluctuations and everything, and it ended up actually going well. And then I would say, like, fast forward to where we're at today. I know for me personally, I think it's important to pivot, and I'm sure we'll talk about this a lot. But going into kind of 2023, buying like existing rental properties just wasn't really something that was seemed to be working well. And I was really going into that year with like a pencils down perspective. Like, I was just going to kind of wait and see how the market went. And then we had something kind of unexpected happen. We had this big tornado that caused a bunch of damage. And we were set up very well to buy and rehab these heavily damaged properties. And so I had intended to not buy anything that year. And I ended up pivoting and buying a bunch of stuff that year because it made sense. And so I think as we get into this, that's something where it was had that not happened or that unique opportunity arose, I probably wouldn't have bought anything that year. And then further, we pivoted this last year into more ground up new construction because that's really the only place I'm seeing opportunity right now. How about you?
Yeah, very similar story. So I've been active for 7 or 8 years, so very similar time frame. But obviously, my dad and the company was very active. Oh 06, oh 07, oh 08, and so I got to experience that a little bit secondhand. But I've heard a lot of the war stories, a lot of what went on there, and so I feel like that impacted me a lot, even though I didn't go through 2008. And so seeing my dad do it, and then just hearing him, for anybody who went through it and was heavily invested, it's a big deal. It's something they still think about. And so hearing the lessons learned from it over and over and over again kind of had a big impact on me. And then, yeah, COVID was, I still remember we were just starting in a brand new single family neighborhood, and we had 35 houses on the ground, and we had one sold. And we thought COVID was going to be the worst thing of all time. And then when the market shifted, it went from 35 houses to 35 sold that we hadn't started yet. Almost overnight. And so COVID was a really interesting time. And then, yeah, coming off of those highs in 21 and 22 to where we are now, at least in our market, we saw incredible rent growth up to 22, 23 even, and then we saw a retraction in rent growth. And so we saw prices drop on single family houses. We saw rent growth shrink and even go negative in some cases where our rent was going backwards. And so, yeah, the current state of the economy is really kind of up in the air. I feel like nobody knows exactly where we're going or what's headed, or our rate's going to go down or go up farther. And so, but what you said, I think, is spot on. There's what I don't know where the original quote is, but my dad has said it before: is if you think there's opportunity out there, there is, and if you think there isn't, there isn't. And it's just a mindset thing. And so no matter whether it's 2008, 2009, 10, there was great opportunity, but there was also great opportunity in 2006, and there's great opportunity now, and there was great opportunity in 2022. And so just trying to have that perspective of there's always something to shift and pivot to. That's kind of how we've treated it over time. But to kind of, I guess, to pivot from that a little bit, a lot of people during these events, get scared and sometimes shut down. They say, "Hey, I had a good run." Unfortunately, in 2008, like, we lost a lot of local home builders. Just to kind of tell our personal company story. So what 2008 really inspired my dad to do was to get into multifamily, is because he saw single family houses in '08 and '09 that weren't selling. He had a lot on the ground, but he saw also that multifamily was moving. It kept building. They kept building. They kept renting. People couldn't afford to buy. They had to rent. And so he kind of spent the next 10 years preparing for where we are now, where the real goal was to have single family to build when times were good and multifamily to build when times were bad. And that's kind of shifted over time, where we're doing a little bit of both and at different times. But that was kind of the big lesson that he learned in 2008, was have different things available that feed different markets so that you can always keep going. Because his big thing was he wants to keep his team together. That the people are the most valuable asset of what we've got going on. And so if you can't sustain that through the bad times, then you're out of danger. And so that was kind of the big lesson he learned in '08. But yeah, why don't you talk more about kind of the opportunities that you saw through COVID and now, and kind of how your thoughts shifted on certain things?
Yeah, I mean, I think one thing that's important to highlight that you said is it's just like having the perspective that even when times are harder, there's got to be some kind of positive there, and somebody, even if things are going hard, somebody's going to be winning at it. I think that the last 2 years have been very hard for everybody. So for real estate investors, for tenants, for builders, like we've seen these price increases over the last several years, and we've seen a run up of the interest rates and inflation and stuff like that. So I think these last couple of years have been really hard. But like one thing I like to remind myself of is, and not necessarily being aware that like unfortunately, I've seen some real estate investors get completely out of the game, or I've seen some builders get completely out of the game because they've had a good run and they're just going to be done with it and not do it anymore, or not do it for now. I try to remind myself that when it gets really tough like that, it's almost a positive because there's going to be less competition. A couple years ago, when interest rates were super low, it was like everybody wanted to be a real estate investor, and so it was like really hard to do deals because there was a bunch of competition for it. And I would say one thing that I've noticed over these last couple of years, especially, that there's not as much competition because not as many people are willing to deal with the hard. And that the just because the deals are tougher to cash flow doesn't make like real estate investing a bad thing, especially if you have that long term perspective. But I also really like how your dad's looked at it, where it's like when things are good and houses are selling, build houses, and when things are bad and houses aren't selling but people need places to rent, like build rentals, like have different plans. And going back to, I guess, when times were good just a couple of years ago, and rates were low, everybody wanted to invest in real estate. One thing I think I question myself a lot is if I should be doing more and doing bigger deals and stuff like that, but realizing that we want to have a positive outlook on things, but it's not always going to be great forever. And so sometimes I was worried that I wasn't doing enough and maybe I was moving slower than I should have been. But now looking back, like I've seen a lot of those guys that were blowing and going and doing all these huge deals and doing this and doing that. And like they're not in business anymore because they were doing too much. They got overextended, and then when the market slowed down and retracted, they couldn't weather that. And so I think having like a balance of like being growth minded when the time comes, but also being aware that those good times in business don't last forever. It's kind of cyclical. So I think that's something really important just to be aware of. And then again, I think tactically for us, it's just like we're going to look for deals where they make sense. And so again, 2 years ago, like to buying existing apartments and or houses as rentals didn't make sense to me. They just didn't pencil out. I thought people were overpaying for existing apartments, and again now I think they were, and it's kind of being exposed a little bit. But we shifted to buying, heavily distressed properties that were destroyed by tornadoes that nobody else wanted. I mean, literally nobody wanted them. And so we bought and rehabbed those, and now I think that's gone away for us. But it's doing infill lots and ground up new construction rentals. Again, we haven't had a ton of success building and selling right now. The sales market is very slow where we're at, but so we're just really focused on building good rental properties, and they're not amazing deals, but they're decent for now. And I really just we're looking at through the perspective or through the lens of like we're just getting a lot of reps. We're getting a lot of good practice in right now. We're spending time improving our systems and the way we operate. And at some point here in the hopefully near future, could be a year from now, it could be 3 years from now, homes are going to start selling again, and then we'll start building to sell when it makes sense. And we're going to be really good at it. Is where a lot of people have just quit building the homes and got a job doing something completely else because it's not easy right now. So I think it's just being able to shift with what makes sense, and then having a long term perspective on stuff is what helps in these slow times.
No, I think that's a great point, and I'd love to hear I'd love to hear about the financing part of deals. The joke is lenders want to lend you money when you don't need it, but when you need it, they
Yeah,
don't want to lend you money.
yeah,
And
yeah,
so
yeah, yeah.
right now there are a lot of deals out there, but banks have pulled back. They've tightened the reins a lot compared to 2002, and so kind of how do you handle that side of it in the different economies or different markets?
Yeah. So I think for me personally, and I have literally joked, that's like a joke I'll tell to a banker when I meet with them, is it's like in a perfect world, if we're going out looking for new banking relationships, like we literally, I try to do it when I don't need money because it's like
Yep.
if, if I have a deal that I need to get financed and I try to go find a new bank, it's like, it's really, they're like, we're all worried and nervous about it. It's like the weirdest thing, but I would say be proactive, and always be working on building those relationships with banks and going out there looking for money. And so we almost make a routine of it. Like we'll try to meet with new banks or new bankers almost on a regular basis. And it's just like, hey, here's who we are. Here's what we're doing. We don't have a financing need right now. We don't need any money right now for anything, but we just want to kind of get to know you guys and see what you guys would be interested in lending on. That way, if the opportunity arises, we can try that relationship out and see it. That has been my best approach. Every time I've had something where I needed to get it financed like quickly and I go to try to ask a new bank for money, it doesn't usually go well because it's like when you need the money, they don't want to give it to you, but when you don't, it's not a big deal. And another thing I say is like, at least for us, we're doing smaller deals and it's like, it's maybe a little bit easier. But we'll test those banking relationships, like small, kind of simple stuff that we know we're going to do really well on. And I'll give you an example. Like when we're building a lot of small houses and duplexes right now, they're not these big, you know, big loans. It's not, nobody's going to hit a home run off of them. But if we are going to try working with a new bank, we may take them something super simple, like it's just a either already stabilized property that we want to refinance, and just do a simple refinance it, and or like maybe, hey, let's just do a couple of these new constructions that we know we're going to knock out of the park, so that you can see how we work, and then slowly build those relationships over time. But the biggest thing would be is like try to make those banking relationships before you need them, and that way when those good deals come, or God forbid you get like in a little bit of cash crunch or you really need the money, you don't want to be going out and trying to find it at that point. It's almost too late.
No, I think there's a lot of wisdom in kind of everything you said, and I would pretty much echo all of it. Before we got into multifamily, I remember distinctly having thoughts because my dad and I were meeting with bankers and really building up and expanding lines of credit that we weren't using. And I was new in the business and didn't totally understand the purpose behind that. And, my dad kept telling bankers, like, hey, we're not using it right now. I totally understand that. But in a little bit, we're going to use it. And so kind of having that foresight to expand those relationships when they want to expand them. And that way you've got it when you need it. Because it's 100% true. You go to get a loan with a new bank on a property right now, it's going to be very difficult and rates are going to be high. Especially in our world of development and construction financing, that's a big risk category for banks. It's something that they've got a lot of oversight on. And so just preparing for that stuff ahead of time, getting it when they want to give it and having it when maybe they don't want to give it, but you've got it locked up, is kind of the best situation to be in. So I really can't add a ton more to what you said. But I think the other thing that you touched on in one of your early answers is just having confidence through the downtimes. And so, like, what do you think? And you mentioned kind of you're creating momentum for when houses sell, but like, what do you think you're learning right now that's going to help you when kind of the tide turns? Like, what are the lessons right now that are going to pay off later on?
So I think for me personally, like one of the biggest things, and I think this was a conscious decision that we made. It's probably been like 2 years now, where we started pushing more on the new constructions because we were doing only rehab stuff, and it was, we literally I went into new constructions. Again, we built them in the past. We just hadn't really focused that much on it, and we have started ramping up our new construction, and it was literally like, I don't think we're going to build a couple of houses. I'm not convinced they're going to sell. So let's make sure we can rent them also. But we want to practice and get better at it. And so, and you kind of like, um, in my opinion, the best, and you learn the fastest when you're actually doing it. Like you can read about and research how to build a new house all day long, but until you actually do it, you don't know what you don't know until you do it. And so it's like we've been slowly over time. So nothing that's going to break the bank, but slowly over time, just doing them so that we get that practice and we learn what works and what doesn't work, and you learn better ways of doing things and different materials to use. And unfortunately, a lot of times it's by mistake. It's like, hey, we've been doing the foundation this way and that's not working well for this. We keep having to fix something. So let's just shift it and do it a different way. And so I think it's just like I said, it's like getting reps in. So like right now I look at it like we're building a lot of these like $200,000 to $300,000 rental properties right now. Like there's nothing sexy about that. Like it's just, they're very simple. But we're getting a lot of practice in, and we're building systems like the project management software, and how do we train and hire project managers and like all this stuff. And so again, when we have the opportunity, I'm sure at some point, I don't know if it's going to be, 6 months from now, it could be 6 years from now. It's like, who knows? But at some point there's going to be the opportunity to build a bunch of houses and we're going to be ready to go. And so I think, but again, it's looking at through that lens as to where I think a lot of these guys who have gotten themselves in trouble or are no longer in business, it's because they're always just looking at like they want to build the house, they can make the most amount of money as quickly as possible. And like those were the first guys to disappear because it's like, there's some houses we built in the last couple of years where we didn't make any money because we had to keep them as rentals. And so it's like there's that immediate reward isn't there. So I think the practice and then just again learning better ways of doing things through that repetition is a lot of it right now. And I'm sure you guys are seeing it with the multifamily. The first building you stood up was probably a ginormous nightmare, and took forever and all these problems. And it's like, but after you've done 10 or 15 of them, it's like it gets easier and easier because you learn through that repetition.
No, I think that's a great point. I think it speaks to something that we talk a lot about in my family. It's just being in the game. You
Yeah.
know, if you were in the game in real estate pre-COVID, you got to take advantage of a huge price jump. Whether it was rentals, whether it was house sales, whatever it was, you had a huge advantage. But for those people who got in at the end and tried to time the market, they generally got hurt pretty bad. Um,
Yeah.
and they probably got out immediately,
Yeah.
which, is a logical decision to make. But now is when the opportunities are happening for the next time when the market goes up. And so, when you talk about, granted, I guess Warren Buffett's in everything. He's in real estate too. But just being in the game for as long as possible is the best way to get rich slow. It's not sexy. It's not exciting. It may not happen overnight, but nobody knows when the market's going to turn around. As much as people tell you they know, they don't know. And the only way to be able to take advantage of that over time is to be actively investing and doing something all the time. And then you're going to be able to realize some big jumps over time. And you're going to get hurt sometimes too. But over the long term, that trend is going to be on the upwards. And so I think that's a really important thing of just getting involved. And like you said, there are a lot of people who wait and then they try at the wrong time and then they get out, and it's just consistency over time is the biggest impact to wealth building or real estate or anything like that. And so I think that's kind of that long-term vision or short-term vision of, exactly like you said, you're not trying to hit a home run on this property, but over 20 years, that investing you're doing is going to be a home run. And so I think having that vision of a long-term outcome versus short-term outcome is important. What would be kind of your final thoughts, takeaways, kind of on this topic of downturns and vision, and like what would you recommend people to kind of tweak their outlook or mindset to be able to take advantage of times like we're
Yeah. I think for me, it's like the biggest thing is just having that long-term perspective. I think if somebody were to look at investing in real estate or building whatever right now, it's just like it's hard to have it make sense. Because you're not going to get rich quick right now, and like if you're just looking at cash on cash returns and just this stuff, it's tough to justify it. But if you're looking at it from a long-term perspective, like you said, just getting in the game and doing deals, even if they're not, maybe it's not cash flowing a ton today, but when I look at it from a long-term perspective, I know if I'm building and holding properties for the long term, even if it's tight and it doesn't make a ton of sense right now. I know that 20 years from now, I'm not going to look back and be like, man, I wish I wouldn't have built and held that brand new construction rental property, because again, it may not appreciate a ton in the next 5 years, and the payments may be high because of the rates, but I know through that long term lens, it's almost always going to make sense, especially with real estate. And that's where I think, for me at least today, right now, we're doing everything through the lens. If we can sell a property and make some money, great. But if not, we want to make sure that we can hold it long term. And because I do know over time with real estate, it heals a lot of those, like either bad deals or deals that are just tight right now. And so I think the biggest thing is for us is we want to be in the game. We want to be doing deals, even if we're doing less deals than we would in an up market. We're still trying to do something. It's like whatever we can do that works, we're going to be doing right now.
No, I think that's spot on. It's the exact same perspective we have of, you got to be involved, you got to be active. Um, and by being active, you're going to have some really interesting stuff come your way. It's just how the world works. Uh, During downturns, people get desperate. They sell things they shouldn't. They sell things at prices that you know you would never have thought were possible. And there have been some really interesting deals that have been done over the years in our area where it didn't make sense even to sell things that cheap, but they needed money, whatever the situation was. And so just being able to be flexible and kind of what we talked about earlier, have access to capital, whether it's lines of credit, whether it's banking relationships, because the times to be aggressive sometimes are the exact times where everybody is running away. And so, but you've got to put yourself in the right situation to be able to take advantage of that. And so it's definitely way easier said than done. But no, I think this is a really great episode. It's something that I think is pretty timely in that a lot of people are kind of struggling right now of, the moniker for a couple of years was survive to 25. That was
Yeah.
what everybody kept saying. And now we're in
Yeah.
25 and it's like, well,
Survive to
maybe it'll be
26.
26. Yeah, maybe it'll be 26 or maybe it'll be 27. And so I think we've gotten to the end of some people's rope and they're feeling discouraged. And so I think this is a pretty timely conversation for them. But yeah, we'd love to hear what people are going through. If we can help, with deals, with properties, if you've got questions, that's what we're here for. And so if anybody wants to leave a comment or reach out to us, we'd love to get involved. But yeah, this was a great episode, and I really appreciate you jumping on this, Chase. But if this was valuable to everybody, if they'll like it, leave a review. It's super important to us. We want to expand our reach, but we really appreciate it, and we'll see everybody next week.
Cool. Have a good one.